Hey everyone, Dana Hayashi here. So I've been a little busy. I wanted to make this video earlier, but that wasn't really logistically possible. So now we're going to talk about it. Why did SPY completely crash for 7 straight hours yesterday? And the answer lies on our favorite Fed figurehead, Jerome Powell. So let's take a look. So these keywords, forceful and rapid, when it comes to inflation rates, not good. But let's see what he said. Whoops.
Chairman Powell was very aggressive in terms of where we are and where we're heading. Take a listen to some of the comments he made just a few minutes ago.
Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain.
So what's he saying there? He's saying that the Fed expects there to be some softening in the labor market, i.e. job.
Yeah, so they want to avoid job numbers dipping, and job numbers dipping means that American households are struggling financially. However, if inflation continues to go up, things that consumers, which we talked about 2 weeks ago with the CPI report, it was looking hopeful. Okay, so the reason this is important is because it looked like since there was no increase in inflation rates and the CPI report showed that, consumer prices were not going up, that looked like, appeared, but not true, that the inflation had peaked. However, let's continue. Hopeful, and I think that was the kind of issue here, is that 2 weeks ago there was a glimmer of hope. The CPI report was showing that consumer goods and prices were going down. Now here comes in Papa Powell saying, nope, we're going to be aggressive and we're not going to back down and we're going to raise interest rates. So things are about to get more expensive, and the market does not like that. It's going to cut into companies' profitabilities and their revenue, all of those things. And so let's look at how the market reacted for every single hour of the trading day on Friday. It was crazy, and I actually was busy for about the first 30 minutes of market open, which was unfortunate because there was a point when the SPY had gone up to 420 and it crashed down so hard when Powell started to speak. But I did have, which is a technical trade, some call options that would have actually been profitable and were at market close on Thursday. But however, because of all this craziness and this anticipation of what he was going to say, and then when he actually said it, the market did not like it. So let's look at that. SPY was just straight. Blood bath, 7 hours. Look at the volume in these sell candles. So traders and investors were waiting on this news. They really, really wanted to see what he was going to say, especially after the positive CPI report. But he's saying, nope, we're going to aggressively raise rates. So that's looking like the market and investors and traders are probably going to have a bearish sentiment going in. Now let's pull out the 1 hour and go to daily. What now? Okay, so we compiled all those 1 hour candles into a massive daily sell candle. This wasn't even a gap down. This is just, as you saw, straight selling all day long, every single hour, no relief. So if I wanted to look at this technically, which I was thinking yesterday when I was watching it, I'm looking to see maybe some relief at the 390s, but you just never know. Nobody knew Friday morning before market opened, before Jerome Powell spoke, that this was going to happen. We're all waiting with bated breath. So my technical analysis would put us at 390s before there's any sign of support. It could get worse than that, though. Nobody knows what the rate of rate hikes is going to be either. So that's putting so much FUD, fear and doubt, uncertainty and doubt into the markets now. And Now my sentiment is shifted to completely bearish, and that's how I'm going to trade and invest moving forward. We are officially, in my opinion, again, not financial advice, in a bear market, and that's what I think. What do you think? How are you going to proceed forward looking at this giant sell candle and seeing how quickly and emotionally and fearfully the market reacted to Jerome Powell's speech? Let me know in the comments down below. Have a good weekend. Bye.